Hello everyone, welcome to today's Web TV Focus, where we delve into the major policy announcement that has sent shockwaves through Nigeria. I am Yemi Lanre Ido. Now, I say a very big welcome to all of you joining us via Twitter Spaces. Our handle, once again, is at WebTV Nigeria on Twitter, Facebook, Instagram, and YouTube. Please request to speak or drop your comments or questions in the chat space and make your contributions count. We appeal to you. So let's begin. In his inaugural address on Monday, the 29th of May, President Bola Tinubu took a bold step to ease pressure on the government's finances by scrapping the long-standing fuel subsidy on petroleum products. And with a resolute declaration, and I quote, he said, "Fuel subsidy is gone." The president embarked on a path that previous administrations had struggled to tread. So today, as we explore the implications of all of this, it becomes evident that this move, while aimed at addressing economic challenges, presents a complex landscape with potential repercussions on petroleum prices and other sectors. Now, pump prices after that announcement skyrocketed from about 200 naira to as much as 600 naira. Even on the dailies today, we saw that it was about 700 naira. So join us as we analyze the aftermath and engage in a spirited discussion on the socio-economic impact of this historic decision on Nigeria's future. The president's mode of communication on this, many people were worried about that, as well as the administration's economic plans. I won't be doing this alone. I'm joined by the former Statistician General, National Bureau of Statistics, and now partner and chief economist at KPMG, Dr. Yemi Kale. He joins me via Twitter Spaces. Also, a senior economist at Proshare, Tosin Ige, is here in the studio. Many thanks for your time, Tosin.
Thank you.
Also joining us is also another senior economist at Proshare, Abdul Kudus Isiaka. He also joins me virtually. Thank you, gentlemen, for joining us in this conversation. Dr. Yemi Kale, if you're there, would ask you to request to speak so that we could bring you on board and approve that. But just before we're clear on that, let me come to you, Tosin, and a very quick one, probably a reaction from you. A lot has happened since that announcement, and many felt that the new president should have been very silent. Some felt, yeah, he did the right thing. Some felt it was reckless with that announcement. Yes, we know that already subsidy was gone because it wasn't provided for in the budget, really. And that announcement to a few people wasn't new, but to many Nigerians, it felt new. What was your initial reaction to that announcement?
All right. Thank you for having me once again. Very well, as you said, it's not a new development anyway, because the past administration actually provided for subsidy for the first half of the year. So that is expected to terminate by June ending to the tune of, I think, 3.36 trillion for that matter. But what came to everybody as a shock, I think, is because the tonation, if I can call it that way, the way the president signals it, it tends to suggest to people that this is the route, this is the policy direction of this government. But you know, inaugural speech in itself actually is not an executive order. It's meant to signal the policy directions of a government. And well, because this particular administration is new, and you know, it's a transition from one administration to the other, so we've seen people eagerly waiting for to understand the direction that the government will take. And so when we saw the president now saying subsidy is gone, it tends to suggest to people that this is a complete deviation from what we are used to. You know, under the current administrations, there have been these cities, I think since 2012, even the administration before Buhari, there have been this battle of ending subsidy or not. And so when we have a new government on the first day saying that subsidy is gone, you know, it sent shockwave to everybody that this is a stern stand and is going to be committed to it. And of course, we see marketers react to that. So, of course, he has told us the direction that he's going to take, and we've seen it all playing out.
It's going to be committed to it. There's already a series of meetings with the TUC, with all the stakeholders involved, and there was a deadlock yesterday because there was no outcome so far. And when that announcement came, there was panic buying. Transportation was affected. A lot will be affected going forward, because if Nigerians had to buy about a liter of petrol for about 500 naira, then you could imagine what the prices of rice would sell at the market, the prices of pepper, tomato, and all the other commodities would sell. And you know, Nigerians don't always wait to hear there's an increase in prices.
Let me just chip this in. It's understandable. If you say, the way I said, the president said it, now marketers are uncertain what will become of the market. And so you've seen them, if they continue to sell at the current market price, what will happen if they go to the market, to the depot, and the price has increased? Let's say they are buying 50,000 liters. Now, what they make at selling 200 naira per liter may not be enough to get the same 50 liter under the current prices.
But so many people had questioned that stand, because subsidy was made available till the end of June, half of the year. So already it has been subsidized. That's the question, really. So why increase the price on the fuel that had been subsidized?
The problem we have is that, see, the subsidy itself, yes, it's been budgeted, but the way it is, there are so much uncertainty around it. And I want to believe, my thought is that NNPC still continue the under recovery they were doing before their transition. So what it means is that NNPC is still bearing the cost as it were. That's why you heard the GMD saying they have a 2.6, government has 2.6 debt with them. So what it means is that NNPC is doing the under recovery. So in that instance, they will factor it as receivable in their balance sheet, which government is meant to actually refund them. But the refunding may not be in kind of government giving them cash. It could be that when they want to make their dividend to the government, they will deduct it, because you know that the model of NNPC now gives them that they will give dividend to the government, the Ministry of Finance Incorporated and Ministry of Petroleum Incorporated. So maybe when they want to give them those dividends, they will make those deductions. And so even if we stop it as we had stopped it now, it only means that the government's debt to the NNPC reduce. So it really doesn't solve anything.
Unfortunately, a lot of Nigerians do not understand all of these. What they want to see is that they are buying at the rate that they're buying. Dr. Yemi Kale, it feels like you've joined us. We would love to get your reaction on this. Kindly make a request to speak. Thank you so much for joining us. Earlier, I told you that Dr. Yemi Kale is the former Statistician General, National Bureau of Statistics, and now partner and chief economist, KPMG. Thank you so much for joining us. I was getting the initial reaction of Tosin here in the studio about the mode of communication, first off, of how the new president made that resolute remark: fuel subsidy is gone. It seemed a lot of Nigerians were not aware that it was gone. Let me also get your initial reaction on this. Was it a reckless announcement, or was it meant to be?
Well, I think that our president as experienced as he is, has just gotten what I call a first-hand experience on how powerful the words of the president in Nigeria can be. And yes, I think we are all aware subsidy is going to go. Most of us are in support of subsidy going, but the narrative has really been about there's no money to pay subsidy to the end of June. I think everybody was working on that assumption, and even in the president's speech, it was also the fact that there's no money that's been provided in the budget to pay for subsidy at the end of June. So I think I don't think the president meant to create that reaction. I don't think he meant to announce that subsidy was gone at that particular point in time. I think what he meant to say was what he had always said, that subsidy is going to go, and we're working towards removing subsidy. You recall that the government
old and incoming had been talking about palliatives and putting things in place before the end of June, when the subsidy will be removed. So I think by making that statement, I think accidentally making that statement, it triggered a chain of events that it was too difficult to take back. And even there was an attempt to take it back, I think it was too late. So I think it was just a communication error. It wasn't, we were not ready for it. And so that's just a lesson in being very careful. What the president says, he has to be very clear. We can't leave any room for ambiguity or for speculation. It has to be very, very clear. And I think that statement, which is actually outside his official written address, created this kind of challenge. And I think it's just one of the lessons that will have to be learned, that the way a president speaks when he's president and the way he speaks when he's campaigning are different. You have to the whole world now is watching. Anything the president utters is extremely important. It can rattle markets positively or negatively. And so we just have to be very careful. And communication is extremely, extremely important. The whole world is optimistic that we are returning back to a market, private sector-led development. So such miscommunication or misunderstanding is not going to help that process. So I think it was just a miscommunication, and I guess the lessons have been learned.
Miscommunication really, and he has to undo it now. And as you rightly said, communication at this point is very, very important. And whatsoever, I mean, the way he's going to handle it is what Nigerians will be looking at, and that would create a footing for his presidency, his administration as we go on. So I would want to know, what would be your suggestion? I mean, meetings are ongoing at the moment. What would be your suggestion for him now to handle this miscommunication that he has done?
Well, I think we've gone past that. The market, the system has reacted, and as a result, everybody has reacted. MPC has come up with his new pricing template, which kind of, although I'm kind of curious to see how that template was done, because it means that it's supposed to mean that the price of PMS is now based on market prices. But then is that, I mean, let's say the template. We have not started producing PMS domestically. Dangote has not started working, so it will be interesting to see how it was derived. But I think that we have gone past that stage. I think now the focus should not be trying to correct what was clearly a miscommunication. I think it is now to move beyond that and then trying to put in place very quickly various policies, approaches, strategies that will minimize the impact very, very quickly. The impact on, I think whatever communication should be done, that will be done now, is not to explain the error. I think it's to explain what next. This is what we're going to do very quickly in terms of minimizing the impact on households and businesses. And I think the president or the presidency has to come out with very, very clear terms. We're going to do A, B, C, D by this time, very, very quickly, and this is how we feel that's going to minimize the shock to the system. This is going to pull. I think that's where the president should focus his communication at this point, not going back and trying to say, well, it wasn't me, it was the old administration, this wasn't meant to be. I think we've gone way past that. I think the next step, like I said, is how do we handle this? How are we going to make life easier? And if we're not going to make life easier, then communicate to the public that, look, this has to be done, and this is why we had to do this, and it's going to hurt before it gets better. But that should be the focus. The focus should be what next, not trying to correct something that has already created. I think we have gone way past that at this point.
Yeah, making life better for Nigerians, and they all want to see how it's going to make life better for them. In his inaugural address, let's talk about his economic plans now. And he talked about a lot of things in that address, talking about interest rates, talking about the foreign exchange, talking about the GDP growth rate and all of that. Now, in that address, he talked about interest rate. Let's take that one after another. Well, of course, we all know he says it's currently too high. Now he is proposing so many things to do in that area. Let's look at the GDP, the GDP growth rate. At the moment, the economic GDP grew at 2.3% in the first quarter of 2023, and we saw that was down from 3.5% in the previous quarter. Now, let's look at unemployment. Nigerians want life to be better for them. The last time that the Bureau ever announced or made a publication about that was in 2020, and that's about 33%. That's in Q4. What's responsible for this, and how do we have a clear direction? Dr. Yemi Kale, this is to you directly. How do we have a clear direction if we are not getting the reports? How is he expected to handle that area of unemployment in Nigeria? At the moment, 33%, that's what we have on record. So I don't know. What's your take on that?
You know that the challenge was more one of adequate funding for the Bureau. The Bureau was not getting enough money for its function. That's why the unemployment study wasn't conducted. Unemployment studies, you don't sit down in the office looking at the books of corporate. Yeah, it's actually field work. You're going into town, you're going to to all the local governments, you're drawing a sample from all the local governments and sending field workers to go and get that information. So it costs money. And if the money is not there, there's just no way that you can keep updating this on a regular basis. But I know that, since I've left anyway, the Bureau has a lot of money now from budget has increased significantly. In fact, the MBS budget in the last 3 years is actually more than my entire budget in 10 years. So they have enough money now to conduct those studies, and they have a lot of support from World Bank. It's funding. I think it's more. They want to. They say that the time is not time for them to revise the methodology, and when you are revising methodology, it's not something you take lightly. For example, the GDP rebasing, which I chaired, took like 2.5 years. It's not something you don't just wake up and just something. They want to revise the methodology in line with the new specifications, and the specifications change on a regular basis. And when you do that, you have to be very careful. You have to be sure that you dot your I's and cross your T's. You just can't come up with anything because it's a new system, and that might take some time. You have to even test it for a while to just ensure that things are working. You might need to go back and see if you can harmonize the historical numbers so that it can be compared. If not, you go forward. And then you have to communicate that new strategy to the general public, data users, so it is clear. So I think between 2021, when I left, when the MBS had no money really, and now they have money, I think it's been a case of funding as well as a decision to change the methodology for computing the unemployment rate. I think now that they've done that, I think they are now in the communication phase. And I guess shortly, you start getting new numbers on a regular basis. Once the methodology change and funding is available, which I believe it is, then it should move. So I think that's all it is. I think it's just a methodology review and then funding that's in 20. But I think in general, we already have the government is not supposed to wait to see, as important as it is to get the data, because the data tells you how well you are doing. Government cannot say that the reason it cannot go and create jobs and expand employment opportunities because it's waiting for NBS to publish employment statistics. We already know the target: 4 million new entrants coming to the market every year, and that's the target for government. They know that to create 3 to 4 million, try to create 3 to 4 million jobs every year, or the unemployment rate or the underemployment rate will rise, and that's very clear. They know that already. Is to go to work pending when they can get data that shows how well they are doing in meeting those targets.
Just before I come back to you, Doctor, let me talk to Tosin here. Tosin, we're looking at the Dangote Refinery already commissioned and some other refineries in Nigeria that we're expecting that will begin to circulate, to produce at the end of the day. That's in Port Harcourt. I think 2 in Port Harcourt and 1 in Kaduna. Okay, Warri and Kaduna. So how do we expect that this would calm down the whole situation, and how soon would that be?
Okay. Let me begin by saying the subsidy removal is actually the first step to all of this, although there's been that argument that we need to sequence it properly in terms of is it a subsidy removal that should come first, or those refineries, the operation of those refineries? But as Doctor said, yes, the president has made his move, so shows that the subsidy is going before the operation of those refineries. But the expectation generally is that the market will become, the system, the petroleum industry will become market reflective, because according to the PIA, the market is supposed to, operate an unrestricted free market system, which that means that we can attract, everything become competitive, and we can attract investment into the downstream sector. So if we have this, the marketers have access, nobody is selling somewhere at a lower price than what the competitive price is saying. So when those refineries come on board, marketers naturally will just go to the Dangote refinery and of course load from that refinery. So at the immediate period, now that we will still be importing and subsidy is removed, what we are likely to see is an higher price. But again, when those refineries come on board, there are some costs that would actually naturally be eliminated. So we'll have slightly a reduced price compared with all of this. And as I said, we have a number of those refineries. Just those national refineries, the NNPC has assured that even the Port Harcourt one some portion of it should be ready before the end of the year. I understand that Boa is
August, I think.
Yeah, well, yeah. Let's just put Q4 anyway, and then Boa is also building another one in, I think, Akwa Ibom, 200,000 barrel capacity. The Dangote. I think there's one coming up in Ogun State. So all across, there are modular refineries too. So Dupont, Watersmith.
These modular refineries, but it doesn't seem like.
Of course, their capacity is quite lower, and of course, many of them don't produce petrol. They produce, I think, diesel and naphtha. So it's difficult for you to rely so much on those modular refineries, but they are doing what they can. I think Edo is also, they've gotten feedstock now, so they should be doing more in that instance. But back to it, the sequencing that we have currently, now we've removed subsidy, and so the operation of those refineries will further deepen the market, where we will have so much supply. We guarantee supply of the petroleum product to the system, and of course by that time we'll have a relatively lower price than what we currently have, and it should provide some respite. But we cannot do away with what doctors say, very critical. The government, as at this period, before the operation of those refineries, we need to put some interventions in place to, reduce the effect on the common man. See, the poor, especially those in the major city, like Lagos, Abuja, and the rest of them, these are the ones that will be mostly affected by this. You don't want to imagine the scale of the impact. More than petrol price has more than doubled. So, and other commodities are going to respond, and wages will be sticky upward. So you need those interventions from the government. I think that's what the government should be talking about as at this period.
All right. The foreign exchange is one factor that's messed up a lot of businesses, really. Even these petroleum marketers, the import of petrol and all of that. And President Tinubu made mention of him unifying the exchange rate when it comes in. And I mean, the shortage of this hard currency has made a lot of issues for Nigeria. So, Doctor, let me ask you, he talked about unifying the exchange rate. How do you think he envisions doing this unification of the exchange rate, which will contribute to direct funding towards many investments? How does he plan to do this?
I don't think the process of unifying the exchange rate is that difficult. It's just collapsing the different windows that were created by CBN. And what you are trying to do is ensure that your exchange rate is determined by demand and supply. So whoever wants to purchase the rate that is going to come out at the end of the day is going to be the rate that is market determined. So I don't think that it is difficult to unify the market, the exchange. All you are saying is that all those demanding FX would come and buy it at one price. So rather than have a preferential price for one part of it, one aspect of the market and another, you're just going to say everybody is going to be treated equally. And if you want foreign exchange, not giving any preference to any particular sector, you're not giving preference to any particular individual. Come and bid for your FX, and whoever bids higher gets it. Maybe I don't understand your question. Otherwise, I don't see this as something that's so difficult to achieve, and especially because this is largely what was happening prior to the current CBN administration. I think it's the current CBN administration that actually just expanded this different windows, so many different windows for FX. So I don't think it's something that is challenging for the CBN and the president to accomplish.
Well, it's not challenging, but it looked like it's been an arduous task for the past administration to do, unifying these multiple windows that we have.
No, I don't think it was difficult to do. I think there was no appetite by the previous administration to do it. We had
foreign exchange accretion has been a problem for more or less the 8 years. So if you check the average FX in the last 8 years, it's about $36 billion. So it's not that far away from what it currently is. So the issues, the previous administration, the CBN under the previous administration was focusing more on controlling demand rather than trying to boost supply. So everything he did was to control demand for Forex. So you are banning several things. You are trying to decide who should get Forex and who should not get Forex. A lot more attention was focused on demand for FX as opposed to trying to boost supply. So it wasn't difficult. It was just because of their strategy, which was we don't know how to increase supply of FX. So we are going to try and manage how much FX, who we give FX to, how much you give FX to, which I think was a bad strategy. Because by doing that, you even discourage more FX from coming in. So it's kind of like a chicken and an egg situation. The government introduced what the CBN itself called unorthodox FX management tactics to try and control the demand of FX because its reserves weren't growing. But by doing that, it further discouraged FX inflow from coming in. And if you notice, in 2019, the total capital inflow in 2019 is more than the total capital inflow in the last 3 years combined. That's as a result of this multiple windows, this inconsistent, unclear policies, this artificially insisting that the naira should stay much higher than its true value. That just discouraged foreign capital. Foreign capital will not come in under such an environment, will not come in when people realize that the naira can probably not hold its current value and it's going to be devalued. It's kind of like what's happening with the oil marketers in terms of crude. They have imported crude at a particular price. They have been told they're not going to get subsidy any longer, and the president said it is gone. So they will just hoard the fuel they have in their stores, because why sell it at 200 naira when you expect that the price is going to go to 600 or something? But it's the same thing applies with FX and the foreign investors. Their biggest problem is that they expect that the naira has to be devalued, so they're not going to bring it in, and that's exactly what's happening in 3 years. So by focusing on controlling FX demand as opposed to policies towards encouraging FX supply, narrowing the gap between the official and parallel market rates, ensuring that the process of getting FX appeared transparent and fair, this problem was created. So it wasn't as if they could not do it. I think there was a deliberate policy focused on managing demand for FX, in which case, come to different windows depending on who you are, you get a different rate. It was just CBN's way of trying to prioritize one sector, one market over the other.
You made a very good point there. But all right, in the meantime, Tosin, you were itching to say something.
Yes, just quickly on what Doctor said. Truly, it's not so difficult, but then you have to put it into context that those are the window under the control of the CBN. You remember there is BTC rate, which of course has become parallel rate now, that is outside their control. So those windows, I think there is a multiple of it also within their framework. They can control those ones, and of course they can unify it. But then we will still be having the same problem, the arbitrage, because it mostly happened between the official rate and the parallel market rate. So again, it now brings to when you unify the official windows together. Now, it now brings which rate are you going to allow it to move managed floating or freely floating? So whichever model you decide then will account for whether we have a convergence to the parallel market rate, which will now narrow the arbitrage that we are seeing or not. But definitely, as it is, if you unify the exchange rate today, what we'll have is the official rate becoming one, but there will still be that parallel market rate, which of course will still promote this arbitrage that we're seeing in the system.
Can I just add to that before people speak, if you don't mind?
All right, please go ahead.
Okay, I just wanted to add that while that challenge, the arbitrage between the official and parallel rate will always be there, but then when you unify the rates, it tends to encourage inflow, and the more the inflow, less the gap between the official and parallel markets. For example, take home remittances. For example, if the official rate is 700 and the parallel market is 720, 730, people who are less discouraged to go for the 730, they might be willing to bring it into the official system because the arbitrage has significantly narrowed. So you get a lot more supply of FX, which at the end of the day helps to keep that gap close to each other, the official and the parallel market. But you're always going to have a situation where there's some gap between the official and parallel. That's not going to change. The objective, the incentive is to narrow it as close as possible so it does not, in the process, create negative incentives and encourage bad behavior, people trying to take advantage of the arbitrage opportunities in that regard. It will encourage foreign investment, capital inflows, for investment, for portfolio investment and FDI. It will also encourage home remittances because the gains from going outside the official system are no longer as attractive.
I said that we assume that we'll be able to increase our productivity in the short term because many of the demand, Nigerians are like the demand for imported goods. And that, of course, has been one of the, in fact, going abroad to school, all of this contributes to the demand for FX. So if these do not improve in the short term, then the demand for FX will still be on the high side.
On the high side.
Again, I don't think that the focus should be really on legitimate increases in the demand for FX. I think it's to try and weed out speculation, which I estimate to be between 20 or 30% of that demand. It doesn't matter how high your demand is, as long as you can guarantee supply. Rather, if your policy to control demand is discouraging supply, then we have a problem. I'd rather leave demand as it is and ensure you accumulate as much supply as possible. Now, if you do that, then you don't have a problem with demand. Just try and in the process, like I said, you're going to weed out a lot of fake speculative demand by doing this, because in the process you're going to narrow the gap between the official and the parallel market. You will take out the speculators, and that the benefits of removing the speculators can be added to this increase in demand for, like you said, for schooling and things of that nature. And by the way, I don't really think that I've not looked at the latest numbers, but I'll be surprised if that is the main. It is a key driver of demand, but I'll be surprised that's the main demand for FX. Just people going to school to getting looking for $20,000-$30,000 to go and do a degree. I think most of it is speculative. I think most of it is for industry. I think most of it is a large proportion of it is just some people trying to play the market, forex trade, and so on.
I mean, a lot of people would have wondered how the government will be monitoring these activities, really, and unification. Once he mentioned that, there was even this fake news this morning, this disinformation about the naira has been devalued to about 630-something naira. But, I mean, closing the gap is really what we're talking about here. So if eventually the gaps are closed between those two markets, how much are we looking at the end of the day, Doctor?
Is your question to forecast the level of the level of devaluation of the naira?
Yes.
Is that what you mean?
Yes.
Well, I'm not very good at fortune telling, but from my own rough model and computation, and this is just mine, I'm not recommending to anybody. I think the fair price of the naira currently, and this changes every day, depends on demand and supply, depends on what is happening in the economy, like was mentioned. But so that this fair price I'm referring to can change tomorrow. It can get better or worse. But if you ask me as of today, what do I think the naira the level the naira has to be devalued to, for it to be sustained for at least 6 months to a year? It has to be I think it's something somewhere between 700 and 800, in between 700 and 800 naira to a dollar. I think if the naira is devalued in between that range, I think that it will encourage foreign capital inflows. It will encourage home remittances, and even without significant improvements in the oil production and oil earnings, the CBN should be able to hold that rate constant for between 6 months to a year. Looking at, and I'm basing this on, I based this on looking at the current demand for FX and then doing some rough adjustment of what I expect to be forex growth going forward. I think it should be between 700 to 800. The CBN should be able to hold that rate constant for 6 months to a year. And once foreign investors see some level of consistency in policies and see that the rate is really relatively constant, you get more and more inflows coming in, which again will help the CBN to be able to maintain it beyond the 6 months to a year that I mentioned. But no, I cannot just automatically speculate that what's going to be the gap between the official and that's going to be. Anybody that tells you they can do that needs to be made CBN governor with immediate effect, because that's some skill that I don't possess anyway.
I mean, Doctor, it is very crucial for the naira to reflect its real value if Nigeria was to attract FDI at the end of the day. All right, let's listen to one of our audiences. Sulaiman, you're requesting to speak. Can we hear you?
Just got the notification that there's a space going on concerning Nigeria economy. Since this administration came on board on 29th of May, subsidy is gone. How I laughed. I laughed because, there's something wrong with our system. In as much as I support this government, this new incoming government, I support them, I voted them, I support the removal of subsidy. But there is a lot of things that is wrong with our system. You can see, once the president make a statement, a lot of businessmen are already changing their prices until the agency came and stopped them. Nigeria is a kind of country where system is not working. And if we should we should change the price of fuel the way they are changing it, the hardship will be too much for our people. You understand? The past government, they said, we are going to make available palliative for the poor. Okay, how do you do that? They have problems with that because this is not working. Now, we have, there's no government, every government subsidized. You can go to the west side, they subsidize. Even in the Middle East, they subsidize.
Yes, Abdul Kudus, subsidy removal is very crucial for Nigeria to move forward, and the president has actually done that.
Listen to me. It is very crucial. We know that. You know that. But the system is not currently working. There are ways in which we can provide palliative for our people. Imagine somebody who doesn't have money. How do you move when the price of fuel is 700? How do you move from where you are? Imagine somebody who is getting 30,000.
Sulaiman, there are talks ongoing, and I'm sure that the federal government will be doing something in that regard. I'm sure they are not sleeping. It's a new government, and palliatives will definitely come on board. I'm sure in the next few days we'll be hearing announcements in that regard. So, yeah, please kindly hold your thoughts so that we'll bring you on later again on this, but let's get our analyst view more on some of the plans that this government is putting in place to ensure that the economy goes on. You heard that question, what he plans to do for local manufacturing businesses in Nigeria, especially to encourage GDP growth and all of that.
Yeah, I think the first point of call from the inaugural speech, the president has made us understand that he's going to look at the multiplicity of tax, because when you look back under the past administrations, the Manufacturing Association of Nigeria has been at the front border of the campaign. I think Proshare Research also did a research along that line of how this multiple tax system is actually affecting businesses. And so the president is talking about, doing away with all those multiple tax, more like unifying those tax again. Because, see, in this part of the world, three things are important to know. That we have multiple taxes, which is affecting businesses. And we even have some implicit tax that some state actors actually tax you. And of course, that is not put into consideration as part of what you are you're making. And in this instance, it eats into your bottom line, the PAT. And again, when you also consider the fact that as a whole in Nigeria, there are some, in the social contract of things, there are some things as business you expect from the government, but eventually you get to, you get to prepare it yourself in this part of the world. Now, all of these things affect manufacturers and even MSMEs. And so we've seen from the disposition of the president in his speech that he's going to be looking at all of this. And interestingly, he has said his economic team will provide a broader understanding, because as I said when I started, this is just meant to be the policy guidance, the forward guidance for how this administration is going to tend to us. And he has given us just a brief overview of, oh, these are what I'm going to do. And so businesses, manufacturers, the big and the small, can then be looking at it and say, oh, it will be interesting to see the team, so that they give us more understanding into all of this. Because the last time, just a few months ago, the past administration even again increased tax on alcoholic beverages, all those. And of course, again, this is when we are still complaining that before, that the tax in the multiple tax system we have is killing businesses, and then you are introducing another one. In fact, someone who was listed a number of businesses that has closed down. I think one of the fast-moving consumer good even announced shutting down some of their product line because of the environment that we've made for businesses. So I commend the new president sitting back and looking at all of this, and it'll be interesting going forward to see how they actually tackle those things, how they implement those initiatives.
How they implement it. Taxation is one very key area, and the new president campaigned on this as of course, as the governor of Lagos State. Increased tax revenues, attracted foreign direct investment. But we're looking at the whole of Nigeria now. It won't be plain sailing for him to do this. Doctor, let me get your take on taxation from the president's angle here. How do you think he will be administering the issue of taxation in this area? It was so easy for him in Lagos State, but we're looking at the whole of Nigeria, where we have a whole lot of informal sector in business in Nigeria. How do you think, or how easy would this be for him?
I think working with the states in this regard would be relatively easier, because they all have a common goal. The total revenue is shared between the states and the federal government anyway. So I don't think there's and states, in addition to the federal government, are having challenges with revenue. So I don't think discussing tax holidays or tax credits or reducing taxes that with the objective of stimulating economic growth that will end up leading to an increase in taxes at the end of the day is going to be something that he will have a challenge pushing through. I think when it comes to, he has mentioned, like previous speaker said, he's mentioned taxes, tax holidays, like I said, tax credits, trying to reduce essentially your GDP. Your GDP, as you know, is your output and intermediate costs. So you can address that by either expanding output, in which case you are trying to expand consumption expenditure, in which case you are trying to improve the purchasing power of Nigerians, either by creating employment opportunities or reducing their personal tax burden, or you are trying to focus on the easier part. You are trying to focus on reducing cost of production. That's why you're talking about tax holidays and tax credits for businesses that employ more young Nigerians. We're looking at his focus on industrial hubs and talking about improving power generation and things of that nature. The objective is to cut cost of production, while at the same time boost consumer demand, and then cost and production at the same time, so that the economy grows. I don't think it will be very difficult, because I think this will end up stimulating economic activity, because both household consumption as well as business operations are having their earnings squeezed, largely as a result of various things that are pushing up their cost of production, in particular taxes. And I think taxes is probably the easiest one to amend. Things like power generation, things like transportation costs, are longer term issues, but a single requesting a reduction in taxes for specific businesses that in particular sectors, I think it's going to be a lot easier to implement. So I don't really think that that's going to be the same way that government in the past administration was able to increase taxes. It's the same ease that the new president can actually take them back down. And I think we have seen that happen several times in the past. Taxes were reduced temporarily during the COVID era, for example. It didn't take that long to pull them. And as we started looking for revenue again, just pushed up again with the. So I don't think that's going to be a challenge for the president to implement. And like I said, his record actually, he has a very good record in doing things like this. I don't think there's going to be any of the states that they all have the same goal, which is to grow their economies, generate more revenue. And I think the best way to generate more revenue is to grow the economy and then tax that increase in growth. Otherwise, all you are doing, if the economy is not growing, all you are doing is pulling more. You are moving resources from one part of the economic sector. For example, the expenditure approach for GDP, where you have your consumption, investment, government expenditure, and net exports. Now, what government did in the last 8 years was that they increased taxes. They spent government expenditure and investment, and they increased government expenditure and investment. So both those constituents of GDP were growing about 30%. But they did that in two ways: one, by taxing businesses to get money to and consumption, household consumption, and businesses, and then by borrowing. And that's why the economy has not grown significantly, because you reduced the two largest shares of your GDP to now fund government expenditure and investment. You're supposed to do that as the economy grows, not do that when the economy is stagnating. So what the president intends to do, which is the reverse, to reduce taxes both for households and for businesses, is to strengthen the two largest shares of GDP. And then if you do that, you boost consumption expenditure, you encourage more consumption, which encourages more output, and output at a lower cost of production. And then that, at the end of the day, gives government more money to continue its investment and expenditure. I think that's the right. So I think the approach being suggested by government is the right way to grow GDP. It shows a clear understanding of the structure of the Nigerian economy, and it shows you that it's the best way anyway to grow our GDP in the short to medium term.
Thank you so much for that. If we were to listen to, because the likes of international organizations like IMF actually pointed out that Nigeria is one of the countries where we have the lowest rate of taxes. I mean, looking at what the government plans to do here, reducing taxes, compared to what the likes of IMF has said, what do you think? Who should we be listening to?
The government of Nigeria understand better the terrain of the system. So IMF can be there and, of course, give speculations about our country. But as I said initially, Nigerians are actually paying tax, but many of them don't get to the government coffers. So when government needs to look at the tax system again, and of course, look at ways to bring those taxes that have been the leakage out of government revenue, need to bring it in. And when they bring it in, then they can, of course, effectively now see what tax Nigerians pay before making those reduction. Because truly, yes, it sounds well for you to reduce tax, but don't forget, we just said now that government is having fiscal constraints. So you need to, rather than just quickly jump into reducing tax, I think there is a need for those tax reform. So look at all the tax system, as I said, the multiplicity of tax that we have. And interestingly, it reminded me that last year, the FIS said they collected about 10 trillion. But what we see in the tax, in fact, the entire revenue, I think is about 5.8 trillion. Again, bringing the inefficiency in terms of maybe the collection, or there is something that,
the transparency and all of it.
It's not yet, but so we need to be careful in reducing tax, because at this period, we really government need the revenue that it can make.
All right, Doctor, you wanted to make a point there.
My point was the IMF is right that Nigeria has one of the lowest tax rates in the. So that's not the problem. The issue is not Nigeria needs increase its tax rates and generate more from taxes. I don't think that's the argument. My point is more the timing. You don't tax the economy when it's struggling, because what are you taxing? You're everywhere in the world when the economy is struggling. Every government in the world tends to reduce taxes to keep the economy flowing. In countries where they have huge consumer lending opportunity, you see that their interest rate will go almost to 0%, just to ensure that consumers continue spending and producers continue producing. So you don't tax. You don't. The time to increase your tax is not when the economy is contracting. You are supposed to increase your tax when the economy is growing and booming. Take advantage of that increase. But you don't tax it. You're supposed to reduce your tax. Reduce your taxes when the economy is struggling, so as to encourage businesses to continue to produce, so as to ensure individuals can, so that prices don't rise, so that consumers can continue spending until you get to that economic contraction period. But you don't. So if you ask me, because government needs money, they want to now go ahead and increase taxes of businesses that are barely able to stay afloat and households that are still. I don't agree that that's the right time. So it's not that taxes should go up or go down. Taxes can go up. It's a policy to increase and reduce taxes, and they are both right. Timing those taxes is what matters.
Yeah, thank you so much. Timing is very crucial. Abdul Kudus, I'm told you're there talking about the environment, the business environment for many Nigerians, and the currency swap issue. This president talked about how it was harshly applied. So if we're going to be looking at that, what potential changes or adjustments would you think he should be making when it concerns this currency swap policy? Abdul Kudus, kindly unmute yourself so we could hear you.
We all know that the policy was introduced in order to basically address the role of financial inducements during elections, although the CBN adduced a number of objectives. But I think what the new government is planning to do is what obtains everywhere in the world, really. You do not phase out the currency in the period of 45 days, as the CBN planned to do earlier on before the courts intervened. So I think even beyond the new December 31 deadline, we would likely see both currencies being in use. So that's what I expect, and that's really what is reasonable. Of course, there are strong arguments for you to change your currency, but it should be done in such a way as not to affect the economy. As a matter of fact, we saw a severe decline, not just in business activity, but also in real GDP growth. We saw the economy plunge into or slow down to 2.31% real GDP growth in the last quarter, owing largely, almost completely to the naira design cash withdrawal limit episode. So I think what's reasonable to do is to allow both currencies run concurrently till gradually we have the old notes phased out, and then we could have new notes addressing some of the fears and concerns the CBN had in the first place, namely counterfeiting, namely global best practice, namely addressing issues of kidnapping, terrorism, banditry. Although, again, I need to also echo some of the concerns that analysts and observers have had over the with regard to the naira design policy. The CBN must be careful not to involve itself in the role of law enforcement agencies. Its role basically is to maintain prudential guidance within the banking system as well as monetary policy, ensuring that there's price stability, managing FX, managing the reserves at the same time, as well as ensuring that there is growth. So I think overall, the CBN needs to, at this point in time, ensure that we have both currencies in circulation, and I think it's perhaps the most advisable thing to do.
Most advisable thing to do. We're winding up on this conversation, but just before we do that, we ask that you drop your comments and questions.
I was going to say a thing or two, really. I've been listening to the conversation around, addressing multiplicity of taxes, as well as some of the initiatives of the incoming administration. And I think that one good thing we're looking towards in the coming administration is they seeing to conclusion, reasonable conclusion, some of the infrastructural projects that the previous administration has had as its legacy, or has as its legacy, 16 trillion naira in infrastructural projects. What this new administration needs to see to a conclusion. I think we're looking at the AKK pipeline project. We're looking at the a number of other projects. We're looking at the PPI, Presidential Power Initiative project. We're looking at rail lines. We're looking at many kilometers of roads that need to be completed. Of course, that have been signed. So those contracts need to be enforced. They need to be seen to a conclusion. That in terms of infrastructure. In terms of taxes, I think a lot of very valid and salient points have been made with regard to how harmonizing all the taxes, harmonizing all the taxes and ensuring that there is too much disruption by having too many intergovernmental agencies chasing, resources. The point that was made earlier about the FIRS generating 10 trillion and then remitting only 5 trillion is, it's indicative to some extent. Although, if you consider the fact that about 52% of FIRS earnings or collections via CIT goes into the federation account, which goes into the federation account, goes to the federal government. Understand that the disparity isn't so much. They would also have some 3 to 4% cost of collection. So if you take all of that into consideration, I think there is room definitely for improvement in terms of cost of collection, and there is also room for tax administration improvement. And I think also in that regard, the administration is talking about using blockchain in order to talk a lot about the use of technology in order to reduce cost of collection and make tax administration a lot more efficient. I think apart from infrastructure and taxes, I think one other thing businesses should look forward to in this administration is the fact that we expect some reduction in interest rates. So if you look at, we're looking basically at the financial statement, the profit and loss statement of businesses. So you're looking at major items being direct costs and operation costs. So operating costs would include items such as, or direct costs would include cost of sales, which would relate directly to inflation. If infrastructure is good, electricity, and you expect that raw materials also come in cheaper. If the exchange rate improves, you expect also that electricity improvements and railroads would reduce the operating cost. Interest expense too would also reduce if there's a downward moderation in terms of the hawkish tendency of the CBN. I think overall, I would give the new administration, of course, it's early days yet, but I'll give the new administration a pass back in terms of what their policy framework is. I would, however, want to sound a note of warning. The previous administration also had very good intentions, but there is a need for timing and sequencing. There is a need for them to address some of these issues in a stepwise manner. And of course, we've seen how perhaps the failure to do so has led to some issues with regard to the subsidy removal. But I think overall, those will be managed, and we're quite optimistic.
All right, Abdul Kudus, already early to give a pass mark really for the new administration. I mean, we really do not have time to talk about so many things that you have pointed out there. And if the government is going to be working so well to achieve these plans that they have put up, they need to deploy technology, just as he rightly said. And of course, probably deploy the principles of IFRS in this area to encourage businesses to be transparent and accountable in their business. But let me get your last words here, guys. Dr. Yemi, he talked about the continuous development, the continuity with the projects ongoing already, and he talked about power. President Buhari gave President Tinubu that soft landing by signing that the law for states to also produce, to generate their own power. Exactly. So, your last words here, how do you think this government should be working with states on generation of power to be able, and also to allow for investors to repatriate their dividends here?
In my opinion, I think the role of government in this regard is to stay out of it and just ensure that the policies that businesses will come in and invest in the power sector or any other sector if the incentives for them to make profit And as simple as that. The more government stays out of anything that will prevent maximizing of profits, their job is just to regulate and create the enabling environment for business. I think the law has already been, the law has been amended. I think it's now more now a case of creating different kinds of incentives that encourage that investment in the sector. The advantage is I'm hearing a lot of I'm hearing a lot of commitments to private sector led development, a lot of commitment to private partnership arrangement. I think at the federal level, the ICRC already exists. I've already in my personally, I've already had conversations with some foreign investors who are also interested in renewable energy and coming in to set these things up. So that's not the problem. Once the policy is right, once the environment to make money is right, the investment will come because the potential in the Nigerian economy for these things is vast. So just stay out of the way of private investment. Listen to the private investors and try as much as possible to give them whatever they need to come out so they will be able to thrive, so they can invest in the economy. I think once those policies and the environment is right, and you are communicating directly with the private investors and you're ensuring that their concerns are met, I think that area, given that there's a huge opportunity and demand in that space, I think it's something that can grow significantly.
All right, thank you so much, Doctor. Abdul Kudus, in 1 minute, do you think the government should also stay out and just monitor and provide the enabling environment, just as Doctor has said?
Yeah, so I'll just very bounce off the points Doctor made, very valid point. And it again speaks to the issues we've made in the past about the government's intervention and involvement in business generally. So we expect the government to put in place the kind of environment that would support businesses, which, would encourage not just foreign but also domestic investment. But to very quickly talk about foreign direct investment, we've seen a consistent decline in foreign portfolio and foreign direct investment. And I think that this current administration needs to be thinking critically about how to use the capital market to drive investment from abroad. We've talked a lot, we've published a lot, we've written a lot about the financialization of the country's idle national assets. We know that there is a national assets register, but I think that at this point, we should step up the conversation. We should actually have a portal where we list some of the assets, idle assets of the country, after financialization, put a value to them, and then be able to even, if not, offer equity on this asset, on these companies, where we could possibly be issuing securities against this asset. So across the world, there are what you call asset-backed treasuries. Asset-backed treasuries around the world are typically at a lower cost. Lower coupons are paid on asset-backed treasuries. And so if we're talking about the cost of servicing our debt, I think it's the right time actually to be considering such an initiative. And we have assets under the NRC, we have the TCN, we have assets in the power sector, the railway sector, in many sectors of the economy that can actually be financialized and securitized, either for convertible, in the form of convertible debt, or even outright equity. So I think that that's one way through which we can very quickly improve our external sector and fiscal liquidity, which are two things that the previous administration had to contend with.
All right, thank you. Thank you for that. Your last word, very briefly. We would really have to round up. Okay. You talked about assets lying fallow, and the investors need to tap into all those assets.
Truly, we have written so much about need to financialize some of the idle assets in the country. But I think the way I started, this current administration has started on a good note, but whether they will sustain this momentum or not, is what we do not know. But then it depends on the people that will be appointed, is that as economic advisors or the ministers. Are they going to be political compensation, or you're going to employ a technocrat to do the job? So that is what we look to in the coming days. And because that, again, the market has actually responded positively to the moves, at least the recent moves moves of the president. We've seen the equity market in the last 2 days responding positively. Even the fixed income market rates are going down. So we will love to see more of that. But as I said, it depends on how the administration push for that, especially in the appointments.
I mean, I kind of liked a particular Daily's headline after that announcement that day, and he said Tinubu. That was the word that was used, because the market rallied at about 5.2%. And that's what we're actually expecting from this administration going forward. And I mean, the next days would actually show, the next days and months will show how this administration will handle these plans that it has in place. And that's our conversation today. Thank you all for listening and sharing your thoughts with us. And we have a special thanks to our contributors, the former Statistician General, National Bureau of Statistics, and now partner and chief economist, KPMG, Dr. Yemi Kale. Thank you so much for your time today. We also thank you, Tosin. Thank you so much. And Abdul Kudus Isiaka, the senior economist at Proshare. You all are appreciated. We thank you so much for coming on Web TV Focus. Now the conversation continues. We thank you, our audiences, too, listening to us. Make sure to share your thoughts and comments with us on social media. You could follow us at WebTV Nigeria on Twitter, Facebook, Instagram, as well as YouTube. Thank you so much. I am Yemi Lanredo. I'll see you again.